All right, talking Tesla, of course, beating on a lot of the main numbers here that the street is looking for. Let's continue the conversation about the numbers here with Leigh Drogan. He's the founder and CEO of Estimize. Of course, this company collects a lot of estimates from forward-looking financial estimates from independent buy-side, sell-side analysts, along with those of private investors and academics. Leigh, always great to have you here during earnings season here. What's your first impression here on Tesla? Because the numbers overall look pretty decent, but I remember 3 months ago they also looked pretty decent, and then the street seemed to sell off the stock.
Yeah, the free cash flow numbers are really good here. I haven't looked too deeply into whether they crossed that threshold of actually generating a profit minus the rec credits. But if they did, that would be their first quarter ever, which would be nice, obviously. In a more macro sense here, yeah, look, they trade at 10 times the market cap of Ford, and they're about to be, in the next couple of quarters, not really the only, pure play, real EV company out there producing cars and trucks at scale. And when that happens, you're obviously seeing the market getting ahead of that, and the multiple is going to come down. It comes down for every growth stock that goes from pure play, only pure play in the market, to other companies that represent that same kind of macro bet, and Tesla just won't be that forever.
I'm looking, of course, at the free cash flow of $619 million, and the amount that they made on those credits, $354 million in the quarter. So a fair whack above. I mean, that amount that they get from the regulatory credits pulling back a little bit, it had been in excess of $500 million, so $500 million the previous quarter. But still, they make a hefty chunk of change on selling those credits. They lose money, clearly, on crypto at the moment overall. But what are the key viewpoints in terms of the forward-looking guidance? They're talking about seeing deliveries grow at more than 50% this year. Is that sort of run rate that you need to see, Leigh?
Look, I don't think there's any run rate that actually makes the multiple here a reasonable multiple relative to other car companies. It's just the reality of things. But this thing is being valued on a couple of different pieces. One is the China story. And I think a couple of minutes ago, Romain really nailed that on the head. And I think there's a real scare here coming out of just the protectionist, not only language, but activity coming out of Xi, in China. And if I had to make a bet on that, I would bet that at some point here down the road, whether it's 6 months, a year, 2 years, 3 years, that relationship gets really bad for Tesla at no fault of its own. It's just the direction that China is heading in. The second piece is the FSD beta just has not in any way lived up to expectations. And this whole company is based on the premise, or the multiple is based on the premise, that this thing becomes a mobility platform. And if you pay attention to what's going on in the tech and what's happening over at Waymo and other places, the gap between Tesla and those places is shrinking. And if, in my opinion, Tesla's just never going to live up to getting to the level that it needs to get to in order for it to become that mobility platform.
Leigh, you're hinting at a question that I asked Ed, and I'd like to ask the question to you as well, because they say that public sentiment for EVs is sort of at this never-before-seen inflection point, and they're working on making it available to the mass market. So we know that there's support for EVs, but is the Tesla story more about, frankly, the cult of Tesla? Or are we buying Tesla, frankly, because it's one of the few EV options out there?
Well, I think it's both. I think there is the cult, and there's a lot of momentum behind that, and there's a very strong base of investors that just simply don't care about that multiple. I think the more important part of it, though, long term, is the mobility platform, and I think that's where eventually they're really going to get hurt. Now, when it comes to EVs specifically, I could not be more bullish on how quickly this transformation is going to go. I think the Ford Lightning is going to be just an absolute watershed event where you get, it's the best-selling car of all time. I think that's going to end up being a massive event for crossing the chasm in that kind of, 12 to 13% of America or the world that would be willing to buy an EV towards just the mass market of people who are willing to do so. But that also comes with this concept that once Tesla's not the only kind of pure play in the market, it just, the sexiness of that multiple is going to come out. It happens every single time in every single kind of technology market.
Yeah, absolutely. I want to get your thoughts here, though, Leigh, on some of the other companies in the big tech sector, most of which are going to be reporting later this week, because we talk about Tesla and the idea of it, whether or not it could sort of become that broader platform. When you talk about the dominance of some of these other tech companies, whether you're talking about the Alphabets or the Amazons and the Apples, and the way that they've sort of grown to a point where whether you want to call them monopolies or whatever, they've become to dominate their respective industries to such a degree here. I'm wondering if whether the conditions out there, at least here in the U.S., are ripe to allow for that for Tesla, for any other companies on the come up here.
I think it's a lot harder, right? When you think about Google and Facebook and Amazon, their moat is scale, right? And they've just compounded that moat as they've scaled up. If you're a small business, if you're a new app, right, you're going straight to Facebook and Instagram for ads because you know that you can get massive scale and you're going to get the lowest prices. If you're a CMB, you're going to go to Google and make sure you're advertising so that when people are searching for you, and that's the place. I don't think a mobility platform is going to have that kind of increasing moat with scale. And I don't think that Tesla is going to have enough of a differentiating factor in the autonomous aspect of what it's building in order to build that moat so that it can protect it. I think a couple of years ago, maybe we thought maybe it would get there ahead of a lot of others, but it's become very obvious that the core technology that they're using just isn't going to get there, 5 years ahead of where Google's going to get there.
Leigh Drogan of Estimize, founder and CEO there. Always appreciate your time, your insights on the fly. You guys, of course, we're all focused on Tesla today, and then we push forward to big tech tomorrow as well. Quickly, just to recap here, Tesla, I have the shares now up about 3.5% post-market. Pretty much a beat across the board on both the top and the bottom line. Caroline, great job of mentioning some of those tax credits of about $350 million, which has really been, I think, the frustration around this company. People say, well, that's the only reason they're profitable. So I know that'll be something that we're also diving into. And we push forward. Who do we have tomorrow? Microsoft, Alphabet, Apple, you name it.
Starbucks. We can talk about Arabica beans a little bit more. But Romain, also what you wanted to talk about today was M&A and antitrust, whether it's big tech, but also whether it's big insurance as well.
Yeah, well, I wonder about it. I mean, we talk about the Aon Willis Tower deal basically being broken up. I remember the U.S. sued back in June, and today the company just basically walked away from it, saying it just wasn't worth it. But you can look at some of these big cap tech companies, and you have to wonder, when does the regulatory cloud really begin to darken for some of them? Again, the environment here in the U.S. way different now under this new administration than what it was before.
Particularly with some of those FTC, the DOJ appointments that we had, I think, last week, and then, of course, in the previous months before with the FTC. So that is something that we will be paying attention to. And what'd you miss? It is next. This is Bloomberg.